They cut us off at our knees.
It's all fabrication.
Mr. Madoff, do you have anything to say?
My wife and I are resilient, we're strong. I think we're going to make it.
Mr. Madoff, say something to your victims, sir.
Between 1960 and 2008, Bernard Madoff built an empire of deception. Once revered as a financial genius, he orchestrated the largest Ponzi scheme in history, defrauding thousands of investors out of an estimated $65 billion. His fall from grace sent shockwaves through the financial world, exposing cracks in regulatory oversight and shaking public trust in Wall Street. This is the story of how Bernie Madoff masterminded the most infamous financial fraud in history, how one man tried to stop him for nearly a decade, and how the scheme ultimately collapsed under the weight of its own lies. Bernard L. Madoff was born in Queens, New York, in 1938. By the 1960s, he had founded Bernard L. Madoff Investment Securities, LLC, a firm that started as a legitimate trading business, but later became the epicenter of an unparalleled financial crime. Madoff gained credibility as an innovator in electronic trading and even served as chairman of NASDAQ in the 1990s. He cultivated an aura of exclusivity, often rejecting potential clients to create an illusion of a sought-after investment opportunity. Investors believed they were lucky to be included. But behind the polished facade was a web of deceit, and Madoff's seemingly impeccable track record was built on manipulation and lies.
The year was 1960. Madoff had just graduated from Hofstra College and married his high school sweetheart, Ruth Alpern. He was working out of her father's accounting firm in Midtown Manhattan. From there, he launched a career as a market maker, matching buyers of stocks with sellers on Wall Street.
He started this little stock trading firm, one of many in Wall Street's outer fringes at that time, and slowly built it up, building up customers. It was kind of like a wholesale firm. He would actually pay clients such as Fidelity, Charles Schwab. He'd pay them a penny a share to come and trade through him, so he saw lots of trading volume that way.
In other words, he would pay for what they call order flow.
Exactly.
What wasn't known on Wall Street was that Madoff had a side business as an investment advisor.
The investment advisory business operated, so far as we can tell, completely under the radar. We know to some extent that it began small. Customers of his who go back the longest started with very small nest eggs.
Madoff's first clients were friends and associates, recruited in places like Queens, Long Island, and the Catskills. With promised returns of around 18%, entire families jumped in. As word spread, Madoff enlisted 2 accountants from his father-in-law's firm.
Bernard Madoff, charged with fraud and money laundering, stands at the heart of perhaps the largest financial scandal in history. I'm Dennis Berman of the Wall Street Journal. Government documents tell plenty about Mr. Madoff, but there's still so many unanswered questions. Where did the money go? Why did people trust Bernie Madoff? How did Mr. Madoff pull off his alleged scheme?
What Madoff did very quickly and very savvily for his own purposes was he covered up what he was doing. He concentrated power in his own hands. No one knew his strategy. He wouldn't tell anyone. He presented it as so brilliant that it could not possibly be shared lest your head explode with the genius of it all.
He had this sort of under-the-radar investment operation that if you were in the right circles, you knew plenty about. When this scandal broke, that's what surprised a lot of people, is a lot of people didn't know he had an investment operation and just sort of knew the brand, the Madoff brand, as this trading business.
Madoff's start came in the 1960s. He was trading penny stocks at the time. Over time, though, Madoff got further into the plumbing of Wall Street, helping people use electronic trading methods to move millions of shares around the stock markets. Sometime during the 1980s, Madoff got less interested in moving stocks around the market and more interested in managing money for wealthy individuals. It's this advisory business that's in the crosshairs of the government investigation.
He operated for about 15 years before he came onto the scene by making an investment in the Cincinnati Stock Exchange and becoming more of a player in electronic trading. Up until then, he had operated in the world of over-the-counter stocks. If you look at his early clients, they were people that he knew from his neighborhood in Queens and Long Island. They were people that knew either his parents or his wife Ruth's parents. He found a lot of people who were very successful and wealthy, but not necessarily financially sophisticated. He worked in the trading business for 40 years, and it's notable that a lot of his clients on the investing side did not come from that business.
I think there's been a lot of misunderstanding about why people gave their money to Madoff, and the word I keep hearing is greed. People invested with Madoff because they were greedy, and there's no doubt some people did. But I think it was mostly about trust. People who were already on the inside with Madoff were very well respected in their communities, at the country club, at the business societies in their towns. And somebody looking for a money manager would turn to that person and say, who should I go to? And that person would say, oh, Madoff is the best, but you can only get in by invitation, and I don't know if he'll take you, but I could ask. And then people are just hooked.
The wealthy over the past few years ran into all of these investments that they didn't understand. In fact, for many of the wealthy, the less they could understand it, the better it was.
Above all was mystique. What was it about Bernie Madoff that made people hand over their life savings? What made Bernie so convincing? People were asking the same questions back in the 1920s when a sweet talker named Charles Ponzi had a plan that no one could refuse. Buy his international reply coupons abroad, convert them in the United States for cold hard cash. The scheme fell in on itself and Ponzi landed in jail for 5 years. But every generation, it seems, has its Charles Ponzi.
All you need to sustain a Ponzi scheme is for more money to come in than to go out. And as long as the incoming money is greater than the outgoing money, you can sustain it forever.
There's two types of Ponzi schemes. There's one that from the start is a fraud, where the operator says, I'm going to take this money, and as long as I keep getting more money, I can keep this alive. The other is, it starts out legitimate, something goes wrong, you make a bad bet on the market, and you can't tell your clients that you did this because if you do it, they'll probably lose confidence in your business is over.
I think what probably happened is a wave of redemptions hit Madoff, and he panicked, and he said, I can't do it anymore. Then he fessed up, then the whole thing fell apart.
At its core, a Ponzi scheme is simple. It takes money from new investors to pay returns to earlier investors. There are no real profits, just a cycle of deception. Madoff's brilliance lay in making it seem real. He claimed his firm used a split-strike conversion strategy, a complex yet legitimate trading method that would provide steady, above-market returns. But Madoff never executed these trades. Instead, he fabricated account statements and financial records, misleading investors into believing their portfolios were growing.
This is a statement of Bernie's firm and went to his investors each month.
Campbell showed us one of the principal tools of the fraud.
Morgan Stanley, PepsiCo, American Express, Pfizer, Bank of America, Procter & Gamble. This particular client thought that Madoff was investing his or her money in these companies.
Yes.
Was he?
No, it's completely fake. He had complete phony records run off of an old, archaic IBM AS400. And every trade was there faked. But that was just for the regulators and for show.
Campbell says plenty of blame extends well beyond Madoff.
How could the regulators not uncover that?
It's inexcusable. It's gross negligence. It's incompetence.
To maintain the illusion, he paid profits to earlier investors using incoming funds from new investors, ensuring no one suspected fraud. As long as new money flowed in, the scheme thrived. For nearly a decade, financial analyst Harry Markopolos knew something was off. In 1999, he was tasked with replicating Madoff's returns, but found it mathematically impossible. He quickly realized that Madoff was running a Ponzi scheme. Markopolos repeatedly warned the Securities and Exchange Commission, SEC, providing detailed reports that outlined the inconsistencies in Madoff's strategy. But despite his efforts, the SEC ignored his warnings multiple times. Markopolos lived in fear, convinced that exposing Madoff could put his life at risk. He later chronicled his battle in the book No One Would Listen, revealing the systemic failures that allowed Madoff's fraud to continue unchecked for years.
The one person who knows the most and is willing to talk is Harry Markopolos, the man who figured out Madoff's scheme before anyone else. He sat down with us for his only television interview.
Until a few months ago, Harry Markopolos was an obscure financial analyst and mildly eccentric fraud investigator from Boston, who most people would never notice on the street.
My modern Greek hero, how you doing?
But today he enjoys an almost heroic status, pursued by journalists and movie producers and honored by colleagues as the man who went to the Securities and Exchange Commission and blew the whistle on Bernie Madoff and his $50 billion fraud.
Thank you. Thank you. Please take your seats.
But he seems uncomfortable with all the attention and knows that he is no hero.
I stand before you, a $50 billion failure.
How many times did you send material to the SEC?
May 2000, October 2001, October, November, and December 2005, then again June 2007, and finally April 2008. So 5 separate SEC submissions.
And in spite of all of the things that you did, it still ended up in disaster.
There's nothing to be proud about in this case. I feel horrible about the result. It's been a total disaster for the victims.
It began a decade ago when Markopolos was working for a Boston investment firm. His boss told him that Bernard Madoff, a former chairman of the NASDAQ stock exchange, was running a huge unregistered hedge fund that was producing incredible returns. He wanted Harry to reverse engineer its trading strategy and revenue streams so that the firm could duplicate Madoff's results.
He had the patina of being a respected citizen, one of the most successful businessmen in New York, and certainly one of the most powerful men on Wall Street. You would never suspect him of fraud unless you knew the math.
So, I mean, you're like a math guy, right?
I've taken all the calculus courses from integral calculus to differential calculus, as well as linear algebra, and statistics, both normal and non-normal.
How long did it take you to figure out that there was something wrong?
It took me 5 minutes to know that it was a fraud. It took me another almost 4 hours of mathematical modeling to prove that it was a fraud.
What were the things that caught your attention?
It was the performance line. As we know, that markets go up and down, and his only went up. He had very few down months. Only 4% of the months were down months, and that would be equivalent to a baseball player in the major leagues batting .960 for a year. Clearly impossible. You would suspect cheating immediately.
Maybe he was just good.
No one's that good.
Harry said there were only 2 plausible explanations. Either Madoff was using insider information to rack up huge profits, or he was running a giant Ponzi scheme.
So either way, he was doing something illegal.
Either way, I knew he was going to go to prison.
In May of 2000, Markopolos took his suspicions about Bernie Madoff to the Boston office of the Securities and Exchange Commission.
Did you have any financial motive?
Yes. He was a competitor of mine in 2000 to 2004 while I was still in the industry. And when someone's competing on your playing field, who's a dirty player, you want him tossed off the field.
He also thought he might be eligible for a sizable reward if the fraud involved insider trading, but that turned out not to be the case.
In your first letter to the SEC back in 2000, you're a little tentative. You say, look, I have no smoking gun.
In 2000, it was more theoretical. In 2001, it was a little bit more real. By 2005, I had 29 red flags that you just couldn't miss on. By 2005, the degree of certainty was approaching 100%.
Over time, and with some simple math calculations, Markopolos concluded that for Madoff to execute the trading strategy he said he was using, he would have had to buy more options on the Chicago Options Exchange than actually existed. Yet he says no one he spoke to there remembered making a single trade with Bernie Madoff's fund.
I would talk to the people I had trading relationships with and ask, did you have a trading relationship with Mr. Bernard Madoff? And they all said, no, we don't think he's for real.
Could you find anybody?
I found no one that ever traded with Mr. Madoff, and I traded with the largest equity derivatives firms in the world.
And that's because Madoff's investment fund never actually made any trades, at least going back to 1993 and probably further. A fact confirmed last week at a meeting of Madoff investors by the trustee charged with liquidating his assets. No one knew the depth of the fraud, but a lot of people had questions.
Who else figured this out besides you?
I would say that hundreds of people suspected something was amiss with the Madoff operation. If you look at who the victims were not, you'll notice that the major firms on Wall Street had no money with Mr. Madoff.
I mean, you write this is the letter, I'm quoting from the letter to the Securities and Exchange Commission, red flag number 20. Madoff is suspected of being a fraud by some of the world's largest, most sophisticated financial services firms. And then you list some of the firms.
Yes, I do.
The biggest firms on Wall Street, and conversations with people high up in those firms.
That is correct. And the SEC ignored that.
Did they call any of these people?
All the SEC had to do was pick up the phone. They never did.
If you had executives at the biggest investment houses in Wall Street that knew something was wrong, why do you think they didn't go to the SEC?
Because people in glass houses don't throw stones, and self-regulation on Wall Street doesn't work.
Madoff's customer list, single-spaced with small type, is 162 pages long, with victims running the gamut from Hollywood royalty to a carpenter's pension fund in Syracuse, New York. Shelley Ludlow has been forced to put her mother in a Medicaid-assisted living facility while she packed up their apartment to move in with a friend, all because of Bernie Madoff.
Our whole lives were turned upside down by this man that sits in his penthouse and smirks.
The same day last week, 70 miles away, Len and Marge Forrest were leaving their house that they had just sold in Setauket, Long Island, and were preparing to drive to South Florida to sell their home there. They had their money with Bernie Madoff for 30 years and lost an 8-figure family fortune 2 days before his 80th birthday.
Do you have any money to live on?
Enough, I would say, for 60 days.
Do you know other people who are in the same situation?
Oh, yes. We have a lot. Unfortunately, and I think probably the thing that tears me up more than anything is the fact that I recommended Madoff to a number of people. And they lost their money, and I'll never stop feeling responsible for that. They were all close family and friends.
Len Forrest and his friends thought they were part of a small, exclusive group of investors lucky enough to have a connection with Bernie Madoff. And because they thought they were making 12% a year, they weren't inclined to ask a lot of questions. Harry Markopolos called it the classic affinity scam.
An affinity scam is when you prey on groups that are similar in nature to yourself. So I'm Greek. If I was going to run an affinity scam, I would run it on the Greek-American community here. Bernie was Jewish, so he ran it on the Jewish community in the United States, but that wouldn't get him enough customers because he always needed new money to keep the scheme going.
Over time, Madoff extended his reach from New York to Palm Beach, where he enlisted hundreds of wealthy clients, many of them recruited from his own country clubs. And he also made connections that gave him entree to Europe and the hedge fund capital of America, Greenwich, Connecticut.
It was here that Bernie Madoff made some of his biggest deals with large investment firms that were willing to feed him billions of dollars of their clients' money to manage. And in return, Bernie Madoff agreed to pay these so-called feeder funds a fortune in annual fees. The largest of the feeder funds was the Fairfield Greenwich Group.
Madoff's scheme didn't just target the wealthy, it ruined charities, pension funds, and thousands of individual investors. Victims included Hollywood celebrities like Kevin Bacon and Steven Spielberg, European banks, and ordinary retirees who lost everything. Some, like French aristocrat René Thierry Magon de la Villouche, took their own lives after realizing their fortunes had vanished. Others, including nonprofits, were forced to shut down due to devastating losses. The emotional toll was just as profound. Many victims described feeling betrayed, not just by Madoff, but by a system that was supposed to protect them.
December 11th, 2008, Bernard Lawrence Madoff, the investment advisor who promised stellar returns, to A-list clients, all while defrauding them of more than $19 billion, was arrested and charged with running history's largest ever Ponzi scheme. Pulled out of his Manhattan apartment building in the morning hours, the arrest would officially unravel a multi-year scheme where Madoff used money from new investors to repay older investors. In some cases, creating false trading records to cover up losses and non-existent investments.
The 2008 financial crisis was the beginning of the end. As investors scrambled to withdraw funds, Madoff could no longer maintain the illusion. He had no real investments, just a massive void. On December 10, 2008, Madoff confessed to his sons that his business was one big lie. The next day, they reported him to the authorities, and the FBI arrested him at his Manhattan penthouse.
This 60 Minutes interviews with Bernie Madoff's wife, Ruth, and son, Andrew, offer a remarkable look into basically the dysfunctional family life of a world-class con man.
Yeah, this morning we want to show you an extra clip of the interview that did not make it on TV on Sunday, where Andrew Madoff talks about how he and his brother told the FBI about their father.
And the decision to turn him in, how did that evolve?
Well, we knew right away that that was our only course of action. Two of us got in the elevator, went back down to the street. Driver was waiting out front of the building and said, you guys need me to take you back to the office, or where's the old man? And we said, he's still upstairs, you're waiting for him, and we just walked out. It was pouring rain outside. And we started to walk down Lexington Avenue and trying to get a taxi. Got in a cab and weren't even really sure where to go. We knew that we couldn't live with this information and not do something about it. And we knew we needed to speak to an attorney, and we knew that that was going to lead to us turning him in. But we didn't know how to do that. Knowing the right thing to do and then knowing how to do it are two totally different things, and we needed help. Luckily, we were able to turn to Mark's father-in-law, who is a litigator, Paul Weiss, and Mark immediately called him and said, we need to talk to you, it's urgent, and he invited us to come over to his apartment, which we did, and we went straight there.
What was his reaction?
He was absolutely shocked. He is an investor. He had put his, he mentioned he'd put his retirement money there very recently, and quickly sort of dismissed that as not relevant, and just please, he just wanted to hear us, hear what happened. We recounted the story, and he couldn't believe it. And we were talking about whether or not we think, was Bernie sane? Was he telling us the truth? Was he making this up? And Mark and I were both clear that he seemed to be clear-headed, and that this was real.
You called the FBI, or the lawyer called the FBI?
It was later that day. Marty London, who's the gentleman who was helping us, Mark's father-in-law, brought in some of his colleagues, and we walked through the situation, and they told us what the proper course of action was in terms of who to call and how this thing is handled, because we just didn't know that. And we made the decision to make the phone call.
When the FBI came in that morning, did you have any idea that your sons had turned this over?
No, I had no idea. I wasn't shocked in retrospect, but I had no idea. I don't think he did either, actually.
What was your reaction when you heard him, that it was the boys who turned the father in?
I realized they had to do it. I wasn't angry at them. Of course they had to do it.
The investigation revealed a fraud that had been running for decades, leaving regulators, investors, and the public in shock. On March 12, 2009, Madoff pleaded guilty to 11 felony charges, including securities fraud and money laundering. His sentencing was a moment of catharsis for victims. In June 2009, Judge Denny Chin sentenced Madoff to 150 years in prison, the maximum allowable sentence, calling his crimes extraordinarily evil. The courtroom was packed with victims, many of whom expressed their anger, pain, and devastation.
Bernie Madoff said he had no excuses before a federal judge sentenced him to 150 years for masterminding the biggest Ponzi scheme in world history. For more on the sentencing and for more on the victims, Bloomberg's Gigi Stone joins us from the courthouse in Lower Manhattan.
Matt, it was a dramatic day in court as victims shared their stories, many of whom lost their entire life savings. They are very angry with Bernard Madoff. They called him a beast. They called him an evil lowlife. Now, joining us is one of the victims who spoke in court. She had very emotional testimony, Sharon Lissauer. She lost her entire life savings to Madoff, a former model. Thank you so much for joining us, Sharon. I'm so sorry for what happened to you. When Bernard Madoff addressed the investors and said that he is sorry, what was going through your mind?
I didn't believe he was sorry because he would have never done this for so many years if he had been sorry. And I said in court, I begged him. I didn't ask him. I begged him and said if he were really sorry and this was really true, that he would. I know he has hidden assets. I know he has offshore accounts which are very difficult to get. And if he really truly felt any remorse, then he would arrange for them to come back, or his family, who has, I'm sure, hidden assets that was obtained from this horrible fraud. I would believe that they would also disclose where they are, and that's the only thing that would make the victims a little bit whole. The fact that he goes 150 years in jail, that's justice has been done. The 12 years that his lawyers asked, justice wouldn't have been done. But what is that really going to do for the investors? Not that I enjoy to see somebody suffering in a jail cell, but would be much more productive if he had billions of dollars in offshore accounts, if he brought them back, and even if investors got 50% of their money back, I would be in heaven.
Have you been able to recoup any of your life savings?
No, I haven't. I'm really very much in trouble. I can't. For the first time, I'm very frightened of my future. Modeling is very slow right now because of the economy, and it's very difficult to pay my bills. And what's worse is, I used to be a very trusting person because I had a European upbringing and I was taught that. And for the first time in my life, I don't trust people anymore. So he's changed me. He's changed me as a person.
So sorry to hear your story. Thank you for joining us and sharing it with us. And that was Sharon Lissauer, one of Madoff's victims, who expressed emotional disbelief at what Madoff did. She did not believe that he was sorry, as he said to the investors that he was. And most of the victims have not been able to recoup any of their losses. A trustee was appointed by the court, Irving Picard, to recover some of Madoff's assets. And prosecutors have so far identified 1,314 victims, account holders, at collective losses of $13 billion, but they say it could take 10 years before they're finished recovering Madoff's assets.
Madoff's sentencing marked the end of an era, but the damage he inflicted would take years, if not decades, to mend.
What I found out from my dealings with the SEC over 8.5 years is that their people are totally untrained in finance, they're unschooled, most of them are just merely lawyers without any financial industry experience.
Well, if the people there aren't trained in securities work, what are they trained in?
How to look at pieces of paper that the securities laws require. They can check every piece of paper perfectly and find misdemeanors, and they'll miss all the financial felonies that are occurring because they never look there. Even when pointed to fraud, they're incapable of finding fraud.
I am frustrated beyond belief. We're talking to ourselves and you're pretending to be here. I really don't understand what's going on. Previous witness said that you guys, as an agency, act like you're deaf, dumb, and blind. And I figured you were coming here, you were going to testify before Congress, and don't dare tell anybody you testified before Congress. You're going to be subjected to violation of false advertising lawsuits, all right? You've told us nothing. And I believe that's your intention. I figured you'd leave your blindfolds and your duct tape and your earplugs behind, but you seem to be wearing them today. And instead of telling us anything, you read from the preamble of your mission statement and broke it up into 5 segments. What the heck went on? Your mission, you said, was to protect investors and detect fraud quickly. How'd that work out? What went wrong? It seems to me a private, with all of your investigators and all of your agency and everything that you all described, one guy with a few friends and helpers discovered this thing nearly a decade ago, led you to this pile of dung that is Bernie Madoff, and stuck your nose in it, and you couldn't figure it out. You couldn't find your backside with 2 hands if the lights were on. Could you explain yourselves? You have single-handedly diffused the American public of any sense of confidence in our financial markets if you are the watchdog. You have totally and thoroughly failed in your mission. Don't you get it? And now other people are investigating what you should have found out, and you're hiding behind, well, maybe we can't talk because someone else is looking at it. Well, you forfeited your right to investigate by not doing it, certainly not doing it properly or adequately. And now you're trying to tell us that because other people are looking at it, you're not going to tell us what's going on? Like hell you won't. What happened here? That's the question. Do we start with hear no evil, see no evil, or do no evil? Take your pick. I only have 5 minutes. No one better start.
Let me start with enforcement. As I said, we did an investigation, we began an investigation in 2006, and it was closed without action.
Why was it closed without action? What did you investigate? What methodology did you use?
And if in the interest
Were you suspicious when a guy had a one-man accounting firm investigating a $50 billion empire? And you keep saying alleged, alleged. This guy confessed on national television, you might have noticed.
And as I said, our objective is to actually hold him accountable in a court of law, bearing our burden of proof.
You missed your chance.
We have a pending action in the Southern District of New York.
You took action after the guy confessed. He turned himself in. Don't give yourself any pat on the back for that.
And, Congressman, every time...
Why didn't you find him is the question.
I understand your question. And we cannot answer as to the specifics. I can talk generally.
You know, if anybody made the case better than Mr. Markopolos, and I didn't think anybody could, about you people being completely inept, you've made the case better than him.
Well, sir, I am sorry you feel that way, profoundly.
I think I'm reflecting what the American public feels. How are they supposed to have confidence that if somebody goes to you with a complaint, gives it to you on a silver platter, with all of the investigation, with all of the numbers, with all of the data, telling you exactly what he did, how he did it, and why he did it, and how he knows that, and after a period of a half a dozen or 8 years, you don't know anything.
I can only talk about what we do overall.
No, we want to know specifically. I don't know what your general purpose in life is. I don't need you to come here to tell me that you hate fraud. Hate when it happens, don't you? But you're supposed to find it out before it happens.
In enforcement, obviously, we can't, and I understand that concern. In enforcement, last year we brought 670 some odd cases. In the past 2 years, we brought 70 cases involving Ponzi schemes. In those 70 cases,
Listen, I'm sure you have medals and ribbons and stuff like that, and congratulations on all the good stuff that you've done. I don't want to belittle any of that. But this is huge. How do you miss that? And we know that there are mini Madoffs out there. They're starting to surface. You missed all of those too. But this one you were pointed at. And Mr. Markopolos says he's going to give you another one tomorrow. He's not even giving it to you. He's giving it out to someone else because nobody has confidence in you guys anymore. Maybe the general counsel, Mr. Vollmer.
The Madoff scandal exposed regulatory failures on a massive scale. The SEC had multiple chances to investigate Madoff, but failed at every turn. The scandal prompted reforms, including the Dodd-Frank Act, which aimed to strengthen financial oversight. But many experts argue that the underlying greed and systemic issues that allowed Madoff to operate still exist in some form today. Bernie Madoff died in prison on April 14, 2021, at the age of 82. His family was devastated. His son Mark took his own life in 2010, while his other son Andrew died of cancer in 2014. His wife, Ruth Madoff, distanced herself from him, but continued to face scrutiny from the public. Efforts to recover funds for victims have led to billions being returned, though many will never recover what they lost. Bernie Madoff's name is forever linked to deception and greed. His case serves as a stark warning about financial fraud and the dangers of blind trust. His downfall reshaped financial regulations and prompted investors to be more skeptical of too-good-to-be-true returns. But the scars left by his crimes remain, a lasting reminder of how unchecked greed can devastate lives. If you or someone you know has been affected by financial fraud, resources are available to help recover losses and prevent future scams. Always research investment opportunities, stay vigilant, and never trust returns that seem too good to be true. Stay informed, subscribe for more in-depth crime investigations, and leave your thoughts in the comments below.